Omaha's housing market hasn't looked like this in a decade. Inventory is at 2015 levels, interest rates are at 2025-year lows, and July's median close sales price in Douglas and Sarpy County is up 5.6% year over year. Meanwhile, President Trump and Jerome Powell are clashing over Fed policy. Last week, we had a weak jobs report and rising unemployment. What does this mean if you're in the market to buy or sell a home in the Omaha area? If you're new here, my name is David. I'm a local realtor, and I make videos all about living in Omaha. And with that, let's take a look at the data. Last week, the 30-year fixed-rate mortgage interest rate hit a 20-25-year low. The 30-year fixed-rate mortgage is right around 6.57%. Lower interest rates are good news if you're a buyer. When rates go down, it means buyers have more buying power. Why did rates go down? When job numbers are weaker than expected, it signals the economy might be slowing down. Therefore, a slower economy means less inflation pressure. The Federal Reserve's biggest fear is inflation. If the job market is weakening, it often means consumer spending will slow, which takes pressure off prices. Less inflation risk makes long-term bonds like the 10-year Treasury more attractive to investors. Weak job reports spook investors. They pull money out of riskier assets like stocks and move into safer ones like bonds. More demand for bonds pushes bond prices up and yields down. Mortgage rates follow those yields, especially the 10-year Treasury, so rates fall. If the labor market shows weakness, the Fed may slow or reverse rate hikes to stimulate the economy. Markets often price those future cuts before the Fed actually moves, which also drags mortgage rates lower. Here is more good news. The spread between the 10-year Treasury and mortgage rates has also narrowed. Normally, mortgage rates are about 1.5 to 2 percentage points higher than the 10-year Treasury yield. That's called the spread. When markets are uncertain, like in 2023 and 2024, the spread can widen, keeping mortgage rates higher than normal, even if the 10-year yield drops. Should you buy now? Now, August is a good month to buy. Now, of course, I'm a real estate agent, so agents always think it's a great time to buy. And if you are going to buy, and if you need any assistance in the Omaha area, feel free to send me an email, shoot me a text, or give me a call. Here's why I think August is a good time to buy. The market slows down a little bit. The buyers in today's market are often dual income households with kids. Kids go back to school in August and the market cools off. Showings decrease. That makes sellers a little bit nervous. And if you're a buyer, that presents an opportunity. Here's another opportunity. Every year during the fall, inventory tends to increase. Around October, sellers who have not sold will then take their home off the market, and that happens every year. So if rates drop and you have plenty of choices, you can negotiate and be settled into your new home before Thanksgiving. In any market, there is always opportunity. If you're prepared and educated, you're going to come out just fine. Let's talk about the current inventory. Currently in Douglas and Sarpy County, we have 2,321 homes on the active market. That's up 14.8% compared to 2024. How does the inventory of today compare to the last decade? We have not had this many homes on the active market since July of 2015. If you're a seller, homes are taking longer to sell. Buyers are doing inspections, asking for concessions, and maybe a little bit off the list price. It's called a normal market. What about new versus existing? Inventory for new construction is down 7.3% compared to last year. Currently, we have 899 new homes on the market. The new construction market kind of regulates itself. If they see the market changing, they're going to dial back construction. Builders build homes in order to make a profit. Every day, a newly built home is sitting vacant. It's costing that builder money. Builders will also adjust to the market. If larger homes are not selling, they will adjust to the market and build a slightly smaller model. They'll do the same thing with, let's say, a ranch or a two-story. They're going to see what is selling and double down on what actually sells. For existing, we currently have 1,421 homes on the active market. That's up 35.3% compared to 2024. Let's look at monthly inventory over the past 5 years. The green line represents new construction and the red line represents existing. We can see where the green line stays relatively stable, whereas the red line has peaks and valleys. As we go into fall, inventory will increase until about October. Then it will decrease. What about home prices? The median closed sales price for July of 2025 was $340,000, which is up 5.6% compared to 2024. What if we break that down to the existing market compared to the new construction market? The median closed sales price for a new construction home was $427,276, which is up 1% compared to 2024. For existing homes, the median closed sales price was up 7.3% compared to 2024. This has been a little bit of an unusual year in the fact that we've had several months where year-over-year prices were down, and we had some months where year-over-year prices were up. What about closed sales? Last month, we had 1,042 closed sales, which is up 0.6% compared to last year. If we compare new versus existing, in July, we closed 162 new construction homes, which is down 8% compared to 2024. And for existing, we closed 880 homes, which is up 2.3% compared to 2024. What about days on market? For days on market, we're going to look at the existing home market. The median days on market was 6 days on the market. That means of all of the homes sold in July, 50% of those homes sold in 6 days or less, and 50% sold in 6 days or more. If we look at the average days on market for existing, it was 14 days. This is up 40% compared to last year. Now, this makes sense. The market slows down. It takes a little bit longer for a home to sell. What about months of supply? Overall, we have 2.6 months of supply. That means if no other homes came on the market, it would take 2.6 months to exhaust the current inventory. If we break that down between new and existing, we have 1.9 months of inventory on the existing side, and we have 6 months of inventory on the new construction side. Keep in mind, many of the listings that are in the new construction phase may still be at lot stage, so that we don't have a true representation of the new construction market in terms of months of inventory. As a reminder, 0 to 3 months of inventory is a seller's market. 4 to 6 months of inventory is a balanced market. And 6 months of inventory or more is a buyer's market. What we're seeing is a move to a more balanced market. Let's look at the average percent of last list price. Let's remove new construction and look at the last 3 years for the existing market. Again, this is an indication of a more normal market. Last month, homes sold for 99.1% of the last list price. And this makes sense. Buyers have a little more room to negotiate, and they're getting a little bit off of that purchase price. Let's look at this graph over a 10-year period. We'll look at the 12-month rolling average to smooth out any month-to-month fluctuation. And you can see that before the pandemic, it was normal for homes to sell between 97.5% to 99.5% of list price. Then things went crazy. From 2020 to 2024, homes sold for well above list price. Now what we're seeing is a return to a more normal market. What about price per square foot? Again, we'll look at a 12-month rolling average and we'll break it down between new construction and existing. For new construction, we're looking at $258 a square foot, and for existing, we're looking at $215 a square foot. What about the price of lumber? The price of lumber is currently at $652 for 1,000 board feet. Over the past year, we have seen lumber vary in price from a low of around $475 to a high of around $700. If you look at the price of lumber over the past 5 years, the price has been relatively stable in the $500 to $650 for 1,000 board feet for the last 3 years. Inflation for the month of June is currently at 2.7%. Now, it has been in the 2 to 3% range over the past several months. Now, it has come down substantially from, several years ago, but will it stay down? Time will tell. What about GDP? In the first quarter, we saw a drop in the GDP. In the first quarter, we saw GDP go down a tad at 0.5%. Then in the second quarter, GDP came roaring back at 3%. There are conflicting economic indicators. We show GDP going in the right direction. However, we have the job numbers moving in the wrong direction. Speaking of job numbers, the unemployment rate is currently at 4.4%, which is up from 4.3% in 2024. Locally, in Douglas County, unemployment is currently at 3.5%, which is up from 3.4% last year. In Sarpy County, unemployment is currently at 3.1%, which is the same as last year.